Understanding the 21 EMA definition, exponential moving average emphasizing recent prices. Calculation, smoothing recent price data, reacting faster. Why 21? Common time frame responsive to short-term trends. The 21 EMA is a key intraday tool. It focuses on the latest price action. It can help you identify short-term trends, understand how it works, and you're ahead of the game. 21 EMA as dynamic support resistance. Bullish signal. Price bounces off 21 EMA during uptrend. Bearish signal. Price rejects 21 EMA during downtrend. Key areas for entry and exit points. The 21 EMA acts as support in uptrends. It acts as resistance in downtrends. These are vital levels. They can help identify potential trade entries and exits. Strategy 1. EMA crossover. Identify when a shorter EMA crosses the 21 EMA, bullish signal price crosses above the 21 EMA, bearish signal price crosses below the 21 EMA. Example, Apple AAPL, 5-minute chart, crossover entry at $170.50, target $171. Look for crossovers between the 21 EMA. Use shorter EMAs to confirm signals. A price crossover is a powerful entry indicator. It can set your profit target. Strategy 2. Pull back to the 21 EMA. Wait for price to pull back to the 21 EMA in a trend. Bullish signal, buy near EMA in uptrend after a pullback. Bearish signal, short near EMA in downtrend after a rally. Example, Tesla, TSLA, 15-minute chart. Buy the dip to $250, stop loss $249. Pull back to the 21 EMA is another strategy. It involves buying dips in uptrends. It involves shorting rallies in downtrends. Set a stop loss below the EMA for protection. Real-world examples and chart analysis. Case study 1. Using 21 EMA on SPY 5-minute chart. March 8, 2024. Case study 2. Using 21 EMA on 3Q Nasdaq 15-minute chart. March 8, 2024. Visually identify entry-exit points, stop-loss levels. Analyzing real charts helps. It reinforces your understanding. See how the 21 EMA performs on SPY and 3Q. Spot entry, exit, and stop-loss opportunities. Risk management, stop-loss placement, below the 21 EMA for longs, above for shorts. Position sizing. Never risk more than 1 to 2% of capital per trade. Avoid over-leveraging. Intraday volatility can amplify losses. Proper risk management is crucial. Always set stop-loss orders. Position size carefully. Never risk too much capital. Avoid excessive leverage. Conclusion. Mastering the 21 EMA. 21 EMA. Simple yet powerful tool for intraday trading. Combine with other indicators RSI, MACD for confluence. Consistent practice and discipline are essential. The 21 EMA is effective. Use it with other indicators. Combine it with RSI and MACD. Practice with consistency. Discipline will amplify results.